Hey, welcome back, my fellow dividend investors. It's me, ET. Remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who likes to think of ways to increase one's net worth. And one of the ways is to set up as much passive income as you possibly can. And one of the ways that I'm using is through dividends. And yes, we have Goldie here today. Boy, I tell you what, Goldie has been laying a lot of golden eggs in the month of September. And you know, I refer to the golden eggs as the dividends. We had a total of 25 dividends payout for the month of September. Let's take a look at them. Let's take a look at the dividends that were paid out in the month of September. As we can see from this one here, this here is the Charles Schwab summary. As you guys already know, I keep my dividend portfolio in my Roth IRA account in Charles Schwab. This here is a report of my investment income, in other words, my dividends, and it shows here that for the month of September, I received a total of $269.95. That was a total of 25 payouts for September. What I like about this also is that it shows you your monthly average and your estimate that you should get for this year. We've got three months left, and they're saying that I should be at about $3,500, averaging $293. Now, another thing that I like about this summary that you have, if you hit this next 12 months, it'll project out 12 months. So for the next 12 months, it's saying that my monthly average income should be, or dividend payout should be $323, and that for the next 12 months, based upon everything I have, it should be $3,800. All right. For the month of September, I did buy 2 shares of Kimberly-Clark. As you can see, it pays $1.14 per quarter. That's going to come out to roughly about $9.12 per year, 3% annual yield. And September, I didn't sell anything, and you guys know these are my rules. If a company cuts its dividend, I'm going to really look at possibly getting out of that company, selling off everything. Also, if there's a 20% loss on my initial investment, and if I played a covered call on it and it gets exercised, or quite naturally, I'm going to lose it. And if I find a better investment out there and need the capital, I'll sell it. All right, let's take a look here. Here's the actual payouts. It's going to go from the least amount to the most amount. REML. It's a monthly pair, pays at 13%. This here is a high risk stock. It's a leverage stock, 2 times the performance of that REIT. That's what makes it so risky. That's why the payout is so good, so high. But anytime you look at a high dividend yield, high risk, baby. Pays out on monthly also. One that I'm going to definitely keep track on. If I start to lose money there, I'll jet. Next we have is a SLVO, paid me 62 cents. This one here is they focus on silver, and they write covered calls on the silver shares. I believe it's SLV. This here pays monthly. I got about 20 shares here, and paid me 62 cents. Here we go. Southworks Solution. This here, I bought this one primarily as a 5G play, but it pays a dividend, so it pays out quarterly about 1.3%. This one here is ARR. It's a REIT. Pays out 11%. Current price is $10.93. I have 10 shares. It pays out monthly. Next we have Suns. It's a monthly payer. Current price $15.59. I have 10 shares. Next we have Gladstone Capital. It's a monthly payer. It's about 7%, and I have a total of 16 shares. This one here, BRMK, is a monthly payer, 8%. I have 15 shares. Current price $10. Qualcomm. Qualcomm is another 5G play that just so happens to pay a dividend. I have 1.5 shares, annual dividend rate of about 2%. Current price is $128.71. Next we have JPS. JPS is a monthly payer. Current price 9.85, and I have about 22 shares. Next, we have LTC, monthly pair, 7%. Dividend yield, I have a total of 6 shares. Current price 32.32. Next, we have 3M, paid me $1.48. I have a total of 1 share. I bought this play primarily as a blue chip play and also as a dividend play. It pays out quarterly. I'm going to add more to this year. Next, we have SCM, paid me $1.61. Pays out monthly. I have a total of 16 shares. Next, we have UTF, 168, monthly pair, 10 shares. Next, we have PTY, that's what I call it, Primco Corporation, paid me $1.69, have 13 shares of the monthly pair. Next, we have USOI. This here is definitely a risky play. Here is an ETN, exchange traded note. And what they do is they do cover calls on crude oil. Current price is $5.29. Current yield is 21%. I have 20 shares. Next, we have Main Street Capital, paid me $3.24. Monthly pairs, 6%. I have 15 shares. XOM paid me $5.22. Pays out quarterly, and I currently have 6 shares. All right, ORCHID is a REIT. It paid me $6.58. Current price $4.94. 16%. I have 103 shares. Next, we have SPHD. It's monthly pair. I have 52 shares. Paid me $6.67. Next, we have OOO is Magic. Paid me $9.74. Monthly pair. About 4%. I have 41 shares. Next, we have QYLD, paid me $9.93, monthly pair, 11% yield, and I have 52 shares. Next, we have CHI, paid me $23.98, monthly pair, pays out about 7.5%. I have 253 shares. Next, we have GOF, paid me $48.89, current price $19.19. Yield is about 11%. I have 271 shares. Next, we have PSAT, paid me $67.73. Current price $8.83. Pays out monthly, 9% yield. I have over 1,000 shares, 1137 to be exact. And finally, we have Bank of America, paid me $70.06. Current price is $43. It's a 2% yield. I have 335 shares. Now, let's just summarize this by taking a look at the portfolio dashboard. All right. For September, I have a total of 33 dividend paying stocks. For September, 25 of those 33 paid out for a total of $269.65. The cost basis that I paid for those 25 companies that paid the dividends was $25,160.89. The current value is $42,744.86. Let's take a look at the portfolio performance. Let me get rid of my picture so we can see everything. Here you can see that the capital appreciation is $17,583. All right, that's the difference between what I paid for the stock, the cost basis, and the current value. That's a 70% increase, capital appreciation, or return on investment, whatever term you want to use. Now, if you look at the annual yield based upon my cost basis, if you just go off of that, it's 13%. But if you look at the current value, it comes out to 8%. Now, this is the last slide. It covers everything. This pretty much is just a detailed summary of everything that we just talked about. If you look at this here, it'll tell you all the information that we just discussed, but also it'll tell you where I stand when it comes to certain stocks. If you look at this, you see that on my P&L, profit and loss for these stocks, I have BRMK that's down 4%. I have LTC that's down 15%. 3M is down 11%, and then we have ORCHID that's down 5%, and then we have SLVO that's down 6%. This is how I keep track to figure out when it's time to get rid of a stock. All right, there you have it. The month of September, total payouts in dividends. Hey guys, when you take a deep analysis of September payouts, one of the things you're going to find is that I have two stocks that paid out 51% of the total payouts. Those two stocks were Bank of America and PSAT. And the reason why is because my cost basis in Bank of America probably it was about $12, $13 per share that I got them. I bought Bank of America during the 2008 to 2009 real estate banking crash. And one of the things I knew that the U.S. government weren't going to let certain big companies fail. There was three stocks that I concentrated on, and I was buying it in 2008 and all the way through 2009. That was Bank of America, BAC, Citicorp, and AIG. When it was all said and done, I had accumulated 600 shares of each one of those companies. And currently right now I have Citicorp and Bank of America left. I sold off all of my AIG sometime last year, made a huge profit, used that money for other endeavors, pretty much, writing cover calls on other stocks. And I sold off about half my position in Citicorp as well as Bank of America. I'm not going to sell off this half, the remaining 300 shares, primarily because those are going to be the anchor for my my dividends, my monthly dividends. Just like in the month of September, my two anchors are going to be Bank of America and PSAT. All right, if you look at all of the others, I got a few others out there with, 100 shares here, 200 shares there, but the vast majority of the other stocks, I may have one, I may have 10, 15, and so forth. And I'll start gradually building those up. But that anchor that I have, those two right there, I bought them doing market crashes. PSAT, I bought that last year in 2020 when we had the CV19 debacle back in March. I bought it then, and I am getting a double benefit of those. I bought them because the price was low and I knew that it was going to bounce back. I didn't buy them for the dividends. The dividend is an extra bonus. I remember Bank of America when I bought it, and trust me, I started chasing it down. I started buying it at 20 and I was chasing it all the way down. I think it broke under 5 and I was still buying. And once I accumulated enough shares, I just put it to the side, forgot about it. And, here we go now. It's in $40, $43 a share. But I also remember the dividends because Bank of America back then was something that I was looking at, wanted to get into before everything happened. And I remember Bank of America used to pay 60 and 70 cents per share on a quarterly basis dividend. Once the crash happened, it started paying 1 cent. So I didn't get into it for the dividend. I got into it for the capital appreciation, and now I'm keeping it because of the capital appreciation and the dividend there. Same thing with PSAT. So I said all of that to say this is that having an anchor, I think, is important. It's just something I learned by chance, having some good stocks. But you still got to diversify. You can't chase the high dividend stocks. I am, because I understand high risk, high reward, and I'm willing to pay the price on some of those. I'm monitoring very, very closely. Have rules set into place as to when I need to really look at possibly getting out of position. But that's me. I would definitely not recommend what I'm doing. Trust me. If you look at some of those dividend yields, I have some very risky ones out there, especially those ETNs, the electronic traded notes. But I'm going to play around with them and see what happens. All right, guys, with all that being said, that's going to do it for the month of September. I will see you next month when we talk about the dividends received in October. And always remember, save, invest, apply what you know, because knowledge is not power. It's the application of that knowledge that gives you true power. You guys take care. Bye-bye.